Hello folk, how you doing? Scotty. So I was asked the question on the economy and what everything means, given the fact that, this whole pandemic is really going to cause a lot of trouble, especially in the economy, and many people may have lost their jobs.
Mostly streets are a less jolting sight as America grows used to life in a pandemic. But the economic pain isn't getting any easier to bear. No one knows which businesses will return, as the latest depressing figures are just a precursor. The worst is yet to come.
Menus are history. They're gone.
Have to go because
Peter Bain is doing what he can to prepare for the day he can reopen his beer hall. But he's also realistic.
I just feel like we're a ship adrift in the fog. We have no direction, we have no guidance. We're just holding on at this point and trying to see what's going to open up and get some sort of direction. But right now we've laid off over 95% of our staff. There's no certainty in this whatsoever. Even if we're at 50% capacity allowed, we're not going to be able to make any money, and we're just going to be losing money. And so how long will that go on for, and how long could we sustain that?
There's a lot of uncertainty, and I don't think anybody can give a definitive answer of what will happen. But what I can say is the fact that this crisis was here long before this pandemic came along. I believe that something catastrophic is ahead. I think things are finally starting to really catch up on governments. I don't think people realise that things are not as rosy as they think it is. I've recently been actually reading a book, Socialism, the failed idea that never dies, and it touches on quite a few things that I wouldn't really have thought of. And I suppose this could tie in to the whole thing of why we're in this mess today.
Well, there's more evidence today of the devastating impact that the pandemic is having on business and the economy. The retailer Next has warned that sales could drop by 40%. And Barclays Bank has reported a substantial drop in profits and said that the cost of people defaulting on loans could be more than £2 billion. Our economics editor Faisal Islam has this assessment.
It is a corporate results season like no other. Grim forecasts for the economy coming to life in the accounts of our biggest companies, such as retailer Next, where store sales plunged 52% over the past 3 months, and the company acknowledged it will be some time before shopping returns to normal. And Barclays, one of the UK's largest banks, announcing a 38% fall in profits and warning the pandemic could cost them over £2 billion in bad loans. Its boss questioning whether after the coronavirus, putting thousands of people in office block headquarters would be a thing of the past.
And then 30 minutes into a call, it's just people yelling at each other.
Despite government subsidies, Lubna and hundreds of other Debenhams workers lost their jobs via a conference call when the already struggling retailer went into administration and had to close some stores.
The 2008 financial crisis, we are not over that. Quantitative easing failed. For some strange reason, people seem to think, and this tends to be these Keynesians, they believe that it's a case that you can just bail yourself out of a mess and continuously increase printing, borrowing and spending, and the debt problem's long been there. The United States, from the last time I checked, is not 21 or 22 trillion dollars in debt. It's more than 220 trillion dollars in debt. Realistically, it may as well just default on its debt. It's the same story in the United Kingdom. People don't understand the difference between official figures and real figures. Over the course of a century-long period, things are progressively getting worse. We faced the Great Depression in the 1930s. People think, oh well, that was just, 90 odd years ago, nothing is going to happen now. And, some people have got this crazy mentality. They think that just because for so long we've been running the printing press and, of course, borrowing and spending what we don't have, then of course we can just go on forever doing that. It's this mentality that's going to end up with a severe economic mess from people that's even more knowledgeable than myself on things, especially like the stock market, and they understand where things are going financially. For example, the European Union is never going to last. Eventually it will come to its end. Will it come sooner as a result of that pandemic? You never know because you can't predict. It's the same thing with regards to why people in this gold war, because this is what's been going on. You know, everybody's rushing out and prepping for what potentially could be ahead. Because history speaks for itself, folk. Since when was a paper currency sustainable? It really isn't. Just listen to a clip here by Peter Schiff.
Well, it doesn't surprise me that there are a handful of companies that are going to benefit from what's happening. Obviously, if people aren't going out and they're staying in, maybe they're spending money online that might otherwise have been spent through other vehicles. But of course, ultimately, a lot of these consumers are just not going to have the money to spend. They're going to run out of aid from the government, or the government money is going to run out of purchasing power due to inflation. But I think the vast majority of companies are going to see substantial hits to their earnings as a result, not just of the coronavirus, but of the recession that was going to start anyway, which the coronavirus has simply accelerated.
Definitely seeing a lot of movement here. Peter, we're also seeing the first major energy company cut its dividend. So it seems like this is the start of the trend of some suspending buybacks and even cutting these dividends, which was traditionally the mechanism used to boost stock prices before. But how will the market react going forward now that we don't have any of these artificial boosters that we once did?
Well, obviously, this is a negative for the market. I mean, a lot of companies have been able to borrow cheap and then use the cash to buy back their own overpriced stocks. Many of these companies are now the recipient of bailout money, unfortunately. They should be allowed to fail so that new management teams can step up and clean house. Instead, we are perpetuating the management teams that made these reckless decisions. But of course, the decisions were made based on monetary policy that was being provided by the Fed, and the Fed is now doubling down on that failed policy. But yes, I think you're going to see a lot of problems for the market. The only thing it has going for it is the Fed. But that's it. But meanwhile, in order to prop up the market, the Fed has to destroy the purchasing power of the dollar. So what investors should be doing is buying gold stocks, because gold and gold stocks will be the biggest beneficiaries of monetary policy.
Well, you are the gold, and well, not just that, but gold is also there's a threat now that it could disappear. Well, not necessarily disappear, but there will be a shortage of gold. What about other precious metals or even industrial metals that we're seeing also go down, like copper, nickel?
Well, that's because of a slowdown in production due to work-related stoppages from coronavirus. And I think that is temporary. The question is how temporary. But precious metals are a totally different story. They are a monetary alternative to fiat currencies that are being debased the world over, but particularly in the United States. So I think when it comes to earnings, gold stocks are going to be among the few companies that see a huge boost to their earnings. In fact, they're benefiting from the reduction in energy prices, because energy is a key cost when it comes to operating a gold mine. So gold mines right now literally are gold mines, and I think investors are ignoring the potential. Even though these stocks have doubled off of their March lows, they're still very cheap, and I think there's tremendous upside that most investors have not even bothered to notice yet.
He's saying what we should do is just leave the market be. Get out of the market. Leave everything to just liquidate. Leave all of it down to the free market. Stop all these bailouts. In other words, the government subsidies, and creating an even bigger problem down the line. But he knows that isn't the case of what they're going to do. And I trust in Peter Schiff, because his predictions were correct, over and above that of the likes of Paul Krugman, who was supposedly, this Nobel Prize winner of economics. Well, we know how credible these Nobel Prize winners are, given the fact that, you've seen President Obama being given a Nobel Peace Prize. You have a lot of people out there who live in this illusion they're doing perfectly fine, and that the British economy is going to thrive and prosper. I said to folk that Brexit is merely the tip of the iceberg. First of all, you're still being ruled by the United Nations. That's your one world government. Secondly, the economy is not sustainable under corporatism. Basically a false, prosperous economy. One with vast debt that the government is seriously going to have to get a hold of. And this is the worrying part, folk. The Tory government managed to dramatically reduce that deficit from about £154 billion right down at one point to about 14 billion or 24 billion or whatever. But all of that hard work is basically gone now. All because of this lockdown. And what the lockdown has done, and like what Peter Schiff has more or less said, it's accelerated this recession. And this recession was coming regardless of that pandemic or not. It's every £1 and $1 to the value of the product. For every $1 or £1 that you print in circulation, there's 1 plus debt added to that currency. The more and more of that paper you print in circulation, the lower the valuation of it, the less purchasing power. Inflation drives up. Costs of goods and services drive up. You make it harder for people to get by. Added to that, you then have government's regulation that sets down barriers to entry into the market, and then you get all these rent seekers. Rent seekers are basically those who seek to live for free off of the losses of others, which is basically the socialising the losses and privatising the gains, or maybe you want to call it capitalising the gains and socialising the losses, essentially. Just like the banking corporate elite, just like those bad banks, they were living for free off of their own losses, whilst you, the taxpayer, would be left to bail them out. That's the style of economy you're living under. You know, just like in the United States in the 19th century, like I explained many times before, government subsidies would be inefficient and would result in a serious debt problem. For example, take Edward Collins and his steamship industry, where he kept borrowing from Congress, more and more money going to waste, and of course it would rack up the debt problem. It's this continual, propping up of failure, of inefficiency. It's a system of rewarding failure and punishing success. That's not capitalism, folk. Capitalism's the free market. Unfortunately, you've got a great many people out there who are not willing to listen. A great many people who hold this emotional attachment to things like the NHS. It's a religious institution. You can see over decades and decades and decades of its failure that despite how much it fails, just continue on using excuses. And it's these excuses that are going to cost people dearly further down the line. Politicians have got no choice but to tell people and make promises to people and tell them lies in order to win their vote. And that's because the majority of people in society do not understand fundamental basic economics. I had one earlier on telling me Keynesians are economically illiterate. Well, I'm sorry to say, but yes, they are. They don't understand the laws of supply and demand. They seem to think, just like Marxists, that they can somehow defy the individual. For some strange reason, they seem to think that they can, act a bit like Marxists in the general sense that, we should achieve our means for society as a whole in the name of social democracy. But they never escape corporatism. Society is made up of individuals, and individuals all have their own needs and wants. We're not all the same. And what Keynesianism is so famous for is overproducing, creating surplus waste, and misallocating into the wrong parts of the market. And you pay the heavy price for that in terms of people's material standards of living, but also, of course, the economy. It's inefficient. Something just doesn't add up. You saw the people of Hong Kong breaking out in riots, and they were fighting for their liberty. Isn't it rather coincidental that a virus just happens to come from the very country that is seeking to take control over Hong Kong and extradite its people? Isn't that funny?